Alright guys, Jason Graystone here. I know I don't put out too many trading analysis videos and trading execution videos. We tend to save the real juicy stuff for the platform members. So we upload every week. We upload a series of watch list videos, myself and Akil Stokes, and we kind of save that for the members of the platform. But I've got a lot of questions about, over the last 6 months to a year, I got a lot of intrigue and a lot of questions about a strategy that I use to attack the trend. And it's something I developed, and it's called the Graystone Trend Continuation strategy. How original. And I wanted to share it with you. I wanted to kind of upload this video to this channel because I thought I'd introduce you guys to it who aren't familiar with it, and kind of let you in on how the principles behind it. Now, I'm not going to go into the full details because there's over 2 hours of training on this, over 5 lessons just on this strategy inside the platform. But I will share with you the basis of it, because we had a couple of really nice trades over the last 2 weeks, one on the New Zealand dollar and an even nicer one on the pound yen. And before the trolls kick in, no, I'm not just showing it because it was a winning trade. I've had a lot of interest in this strategy. I'm going to share it with you. So what the strategy is essentially a nice way for intraday traders to attack the trend and get a first chance at attacking it, then a second chance at attacking it, then a third chance at attacking the same move. So it's kind of an aggressive approach, and then there's also a fourth way that you can enter it, and that's using advanced patterns. But before we get into it, I just want to kind of take you through the principles of what we're looking for. So essentially we're just looking for a trend. Okay, and once we've identified the trend, I'm assuming you all know and understand how to identify a trend. What we're doing is we're looking for the pullback. Once we see the pullback, we're looking for the first chance that allows us to attack this trend for the continuation down. Now, I'm a continuation trader. I'm not looking for extended targets. I'm not a trend following trader. I always take profits off at a retest of the low or the high, depending on what way we're going, and then I trail stops to target twos, depending if we've got room to move. But the first chance entry is essentially the lowest low, the lowest spike of the candle here to the lowest close. So it's around this zone here, and this is be the first chance that I look to enter. Now, on the first chance entry, I can drop down to the lower trading time frame, and I can use a retest of that zone to enter and get really nice tight stops above the retest. So if we drop down to the lower time frame, we get a nice retest in here. I can get my stop loss above this retest and then look to shoot for the lows for targets. So immediately that gives me a really nice reward to risk, and it also gives me the first chance of entering without missing out on that move, because sometimes it rolls over and we miss it, it goes off without us. So it's a real nice way to catch that first chance without having a lot of risk, because obviously the second chance, our stop loss needs to be above this previous high, because this is where we draw out the conventional kill zone. You can hear the dogs in the background. But the conventional kill zone, you've seen me do many times before in these videos on this channel, where I draw out the kill zone that gives me the reward to risk of a minimum 1-to-1, and then I'm looking for a lower low, lower close candle in this instance, if we're bearish, without violating this previous high. If we violate, we spike up but don't close above the previous high, that's when I look for the third chance entry, which is going to be the highest high to the highest close. So we look for, again, just similar to the first chance, we're looking for a little retest of structure up here if we push up. And the reason we're conservative up there, the reason we want to get really tight stops up there, is because if we do pull up to that third chance zone, that can signify quite often that we're going to see a rotation, because we're running out, we're running out of steam. We're kind of losing the momentum in the trend. We're pulling right back up into previous structure, and obviously sometimes we see a rotation here, which could be a head and shoulders, some kind of reversal pattern. So by doing this, we can get a really tight stop but once we get in, we still keep the targets right down at the low. So if we catch these, they can be very, very profitable. So that's kind of the premise behind it. And we caught one here on the New Zealand dollar. This was a lower time frame example last week, where we had the pullback. We caught this little move here, and we've continued down. In fact, this is a pair that I'm going to be looking for a short on later on this week. But what I want to share with you is the pound yen, because the pound yen is the trade that I kind of put out in the Trading Edge last week. Okay, so I put this into the Trading Edge video as it was playing out on Tuesday last week, and this was the setup. So we were looking at the pound yen, we were having our lower low, lower closes, we were putting in this nice bearish trend, and then we started to pull back up, and this is where I started to look for that continuation. So what I'm going to do is I'm going to cut here, I'm going to show you the analysis that I did for the live room members before this was playing out, and then as I got involved. So here it is. Okay, and then the last one I want to share with you is the pound yen. We're approaching this previous level down at 136 flat. I predict that that's where market's likely to go next. We've had this big bearish run, okay, and as we drop down to the trading time frames here, we was looking for a counter trend move at this stage. We was looking for a structure-based trade, but we haven't actually pushed down there yet. So we haven't pushed down there yet, but what we have seen is this really nice, strong trend. We've been pushing down, pushing down, pushing down, pushing down, pushing down. Okay, what happened was, if I just zoom in, this is a trade that I'm in, by the way. So what happened was, is we pushed up, and we got that first chance Graystone entry right here. We had the double, we had the retest in here, but what was really interesting is we also had an equal measured move. Now, one of the things that I studied when I was testing patterns is the completion points of the patterns and what confluence we had with other indicators and other confirmation, and I found that patterns, advanced patterns that completed with an equal measure move, had a 19.5% higher strike rate. And I also found that if they had a double top or a retest of structure at the completion point, they had an 18.5% higher strike rate. Now you could bring on fib confluence here as well. You're going to see we've got a 618 retracement here at that level. We've got previous support become resistance, which is the Graystone entry, okay, and really, really nice. What else we've got is we've had this triple test as well, so we haven't actually violated this level here. We've pushed up and tested again, and finally, if we do go from this swing high to swing low, you're going to see that we've got X, A, B, C, D. So even if we don't enter here, you've got a bat pattern up here for an aggressive entry. Okay, so the way I'm handling this, I've got my stop loss here at 138.37, okay, and my targets are down here at 136.82. And if I just bring that on, you can see that I haven't been stopped out. It's a tight stop loss, obviously a tight stop loss, very, very nice reward to risk, and hopefully we can push down on this tomorrow and hit targets. So the trades that I put out on the Trading Edge video on Tuesday, okay, this was one of them. All right, this was the pound yen. Okay, we had the complex pullback, had the retest. You could have also been waiting for the pattern or the fib inversion trade. We had equal measured move. We had a retest of structure in that first chance entry zone, and this was the trade that we took. Very, very tight risk to a great reward. Obviously, I'll take these all day long. This is probably going to be, what is it, 120 pips or so? I think it is. Let's just quickly do it. Yeah, 123 pips. All right, so as you can see, I got involved on this retest. Got involved on the retest, got my really tight stops in up around this 37 zone. Almost got stopped out, but we ended up rolling over, and I ended up getting 123 pips out of this, which capitalized on Friday. Now we've put in a new low, which means I'm going to be looking to attack this again in tomorrow's live room. I'm going to look for continuation lower, and I can already see that we've got a lower low lower close right here. And if this closes lower, what I'm going to be doing is I'm going to be dropping down, doing some day trading tomorrow and looking for a zone in here for me to short. So that's the pound yen. I wanted to share that with you. If you're interested in learning more about this strategy, you can go into the platform. Don't jump straight into the platform. You know, check out the trial. We do a 2-week trial. Trading isn't for everyone, guys. It really isn't. But if you go in, take the trial, spend 2 weeks with us, and then you think, actually, I can do this, then you can apply for the full membership and you can go through all the course and do all these, you know, learn all these great strategies. So lastly, I want to share with you a trade that I just got involved with on the euro dollar. So this is the euro dollar here. I'm just going to remove all these drawing tools off of here. And what we're looking at, let me just clear this off a sec. What we're looking at is if we just jump out to the daily quickly. Overall, this pair, I've got a bearish bias, okay? Bearish, bearish, bearish. I'm predicting a move right down to 1.040, so those extreme lows. And we've been bearish recently, but what we've seen just in the last few weeks is a fail to put in a new low. We've actually seen a hold of this level, which means we've gone into this structure consolidation zone. Now, one level to pay attention to on this market is 1200. That's a very, very powerful level in this market. And we broke out of that zone. And as we've pushed back down, you can see we held once, we pushed back up, we pushed back down, and we're at that level again. So what we're looking at today is this really nice double bottom, or this retest of support at that zone. So we had equal tests, price put in equal tests of the low. We had nice bullish divergence on the RSI, which shows that there's likely to see a little relief rally here. The problem with many of our live room members caught this as a trade in itself. I think many of them had kind of 382 retracement targets, which you can see hit that like a wall, and then you capitalized on the trade. But because there was no minor structure looking left, okay, because we didn't have structure looking left, I need to be a little bit more conservative with my entry here. So what I look for is something called a 2618. And there's only certain scenarios on certain pairs that I can actually take this trade. And this is one of them. So 1200 flat, I know that's a decent level in the market. We should see that level hold. So what I'm looking at is a break of this retracement. So essentially the first move to play out. And then I'm looking for a pullback down into what we call a 2618 trade. And it's called a 2618 trade because the 2 for the double bottom and then a pull into the 618, which is right here, which we've pulled into. And then you could set a limit order to get long at that. And the reason I'm even more conservative is because I like a minimum 1-to-1 reward to risk. Now I'm using an ATR based stop, which puts me down here, which means I need a 1-to-1, which means I need to enter a little bit lower than those conventional 618 entries. So that's what I did. I waited for price action to give me a minimum 1-to-1, and I got in here at 12.15. Stop loss is down here at 11.94, and as you can see, I drew that on perfectly there, 12.38. So you can see I'm in this trade. This is the live room account. So this is a 10 grand account. The reason we keep it at 10 grand is because it's kind of relatable to the traders that are working up to that capital, or trader. We've got many traders that trade 20, 30, 40, 50, even 100 grand accounts inside the live room. In fact, we've got pro traders, you know, with 6-figure accounts. But this is kind of relatable. So this is the account we trade transparently in front of everyone every day. This is also linked to a personal intraday trading account of mine. And it gives you guys a real belief transference. It gives you absolute transparency over how we manage trades. We trade too many lots. It's quite conservative. We fix position size. It's worst case scenario stuff. So that you get realistic expectations as well. So this is a trade I'm in. Hopefully we can push up and hit targets. I'll be looking to short the New Zealand dollar tomorrow, the pound yen, and the pound dollar. So whatever it is you do in the markets this week, good luck. Good luck in your trading. If you're interested in learning more about the Graystone Trend Continuation strategy, check out the link below this video, and hopefully we can work together soon. But if not, I wish you all the best in your trading. Until next time, take care, and I'll see you then.